All right, welcome back to the deep dive. Today we're going to be taking a look at Zumiez earnings call.
Yeah.
So right off the bat, what are some of the big things that stood out to you in this one?
Well, for Q4, their total sales were actually down a little bit year over year.
No.
But, that's because the prior year had an extra week in it.
Right.
When you adjust for that, comparable sales were actually up 5.9%.
Okay, so that's good. That's healthy.
Yeah. Plus, their profitability was way up. I mean, their operating profit more than doubled, and their EPS, earnings per share, was up like 95% after you adjust for a one-time charge they had last year.
Wow, okay. That's a big jump.
Yeah, it is. And then if you look at the whole fiscal year, net sales were up a little bit, like 1.6%. Comparable sales for the whole year were up 4%.
Okay, all right. So I'm looking at the sales performance here.
Yeah.
For Q4, total sales were $279.2 million, right?
That's right.
And then a year earlier was $281.8 million.
Yeah, but again, remember that extra week last year?
Right.
So on a comparable 13-week basis, sales were actually up 5.9%.
Okay, yeah.
And that's pretty good.
That is healthy.
Yeah.
What about, so that's total sales. What about breaking it down by geography?
Yeah, good point. So in North America, net sales for the quarter were up 0.8%. That's comparing 13 weeks this year to 14 weeks last year.
Right.
And then if you look at it on a 13-week to 13-week basis, North America comparable sales were up 7.2%.
Wow. So North America is really driving things.
Definitely seems like it.
What about international?
So internationally, net sales were actually down 6.4% compared to the 14-week period a year ago.
Okay.
But on a 13-week to 13-week basis, they were up 1.9%.
Okay, so still positive.
Still positive, yeah, just not as strong as North America.
Got it. Now, what about for the full year? They talked about closing some stores. How did that affect their overall sales numbers?
Right. So for the full fiscal year, net sales came in at $889.2 million, which is up 1.6% from $875.5 million the year before. And remember, they closed 33 stores during the year, so that's pretty good growth considering that.
Yeah, I mean, closing stores and still growing sales, that's impressive.
It is. And their full year comparable sales were up 4%, with North America up 6.2%.
Strong.
Yeah, international comparable sales were down 4.8% for the year.
Got it.
But early in this current fiscal year, in the first 4 weeks ending March 1st, total sales were up 1.7% and comparable sales were up 4.3%.
Oh, wow. So they're starting off the year strong.
Yeah, looks like it.
Okay, so that's good news. Let's talk about what they're actually selling, like which categories are performing well.
Yeah, good question. So in Q4, their strongest category was women's.
Okay.
That had the best comparable sales growth. Men's was also strong, and footwear did well too.
Okay.
Accessories and hard goods were the weak spots. Those had negative comparable sales.
Okay, and how about for the full year?
For the full year, men's was their top performer.
Okay.
Women's and footwear also had positive comparable sales. And then again, accessories and hard goods lagged behind for the whole year.
Interesting. Okay, now you mentioned earlier that their profitability was way up.
Oh, yeah.
Let's dig into that a little bit more. So what were the key drivers there?
Okay, so in Q4, gross profit was $101 million, up from $96.7 million in the same period last year.
Okay.
Their gross margin improved to 36.2% from 34.3%.
Right.
And that was driven by better product margins and lower web shipping costs.
Okay, that makes sense.
Their SG&A expenses also came down significantly.
SG&A, that's like their overhead.
Right,
So-
exactly. So SG&A as a percentage of sales dropped to 29% from 45.9% a year ago.
Wow, that's a huge drop.
It is. And the main reason for that is that they had a big goodwill impairment charge last year related to their European business.
Oh, right.
And that really inflated their expenses last year.
So it's not really an apples-to-apples comparison.
Right, exactly.
Okay, but even so, their operating income was way up in Q4, right?
Yeah, it was $20.1 million, which is a huge improvement from the operating loss they had a year ago.
That's a big turnaround.
Yeah, it is. And then for the full year, their gross margin also improved. It was 34.1% compared to 32.1% the year before.
Right.
And they had operating income of $2 million for the year, which again is a big improvement from the loss they had the previous year.
Okay, so it sounds like their profitability is definitely trending in the right direction.
Yeah, no doubt about it.
All right. Now let's talk about their strategic initiatives and outlook. What are they focused on going forward?
So their main focus is still on accelerating their global top-line growth.
Okay.
And they're doing that by focusing on newness in their assortments.
Okay.
They launched over 120 new brands in 2024.
Wow.
and over 150 in 2023.
So they're really bringing in a lot of new stuff.
Yeah, they are. And they're also continuing to expand their private label, which now accounts for almost 28% of their total sales.
Okay, up from 23% in 2023?
Yeah.
And they're also emphasizing customer engagement, right?
Yeah, through both service and technology.
Okay. And then we talked about the store closures earlier. What else did they say about their store strategy?
So they closed 31 underperforming stores in 2024.
Right.
And they plan to close about 20 more in 2025.
So they're really trimming down their store count.
Yeah, they're focusing on their most profitable locations.
Okay.
Their European business has actually been improving.
Oh, really?
Yeah, they saw improving sales trends throughout 2024.
Okay.
And Q4 was actually positive in Europe.
Wow. Okay. And what's their strategy there?
They're focused on full price selling and margin improvement in Europe.
Okay. So they're really trying to turn things around over there.
Yeah, they are.
Now, what about their specific guidance for Q1 and the full year?
Okay, so for Q1, they're expecting total sales between 179 million and 183 million,
Okay.
which would be growth of 1% to 3%.
Right.
And they're expecting comparable sales to be up 3% to 5%.
Okay.
But they're actually projecting an operating loss for Q1.
Oh, interesting.
Yeah, they're saying the loss will be between 16.5 million and 18.5 million. And that translates to a loss per share between 72 cents and 82 cents.
All right. So Q1 is going to be a little rough.
Yeah, it seems that way.
But what about the full year?
For the full year, they're expecting sales growth despite the store closures.
Okay, that's good.
They're also expecting continued product margin growth and relatively flat SG&A as a percentage of sales.
All right.
And they think that will lead to higher operating margins for the full year.
Okay, so they're optimistic about the full year.
Yeah, it sounds like it.
Now, what about their balance sheet? They're in a pretty good financial position, right?
Yeah, they ended the year with 147.6 million in cash and marketable securities.
Okay.
And they have no debt.
That's always good to hear.
Yeah, it is. They also repurchased 25.2 million of their stock in 2024.
Okay.
And they've approved another 25 million repurchase program.
All right, so they're returning some cash to shareholders.
Yeah, they are. But they did mention that their inventory levels are higher than they'd like.
Oh, okay. Why is that?
They said it's due to lower sales than they expected in December.
Okay.
And they also pulled forward some receipts because they were anticipating tariffs.
Right, right. So speaking of tariffs, how are they dealing with that whole situation?
Well, they're working with their brands who represent over 70% of their business.
Okay.
And they're also diversifying their sourcing away from China.
Okay.
Currently, about 50% of their North American receipts are from China,
All right.
which is down from where it was before.
Okay, so they're taking steps to mitigate the impact of tariffs.
Yeah, it seems like they're being proactive about it.
Now, looking ahead, what are some of the key leverage points you see for them?
Well, they expect continued gross margin improvement,
Cool.
both from product margin growth and by leveraging their occupancy and distribution costs.
Right.
They expect SG&A to grow in line with sales.
Okay.
And they said that if sales exceed expectations, there's potential for significant flow-through, meaning that a large percentage of that extra revenue would drop down to the bottom line.
Okay.
Like they said, it could be 30% or more.
Wow, that's significant.
Yeah, it is. And they also said they expect operating margin to grow even with low single-digit comparable sales growth.
Okay, so they're pretty confident about their ability to improve profitability.
Yeah, I would say so.
All right, so that's a great overview of Zumiez's earnings call.
Yeah.
Now, for our This Is Not Financial Advice segment, what's an outrageous but plausible trade idea that comes to mind based on this deep dive?
All right, so let me throw this out there. How about a pairs trade where you go long Zumiez
Okay.
and you short a broader retail ETF, one that's heavily weighted towards mall-based retailers, you know, the ones that are really struggling.
Right.
And the idea here is that Zumiez, with their focus on new brands and private label and cost management,
Yeah.
they might actually be able to outperform the broader retail environment.
Okay, so you're betting on Zumiez's specific strengths.
Exactly, yeah.
That's interesting. Got another one.
Okay, how about this? Zumiez mentioned that their inventory is higher than they'd like.
Right.
And they expect product margins to improve this year. So, what if you go long a logistics or warehousing company that specializes in inventory management and value-added services for retailers?
Okay. Interesting.
The thinking here is that if Zumiez and other retailers are successful in clearing out their excess inventory at higher margins, then these logistics companies could see a surge in demand.
Okay, so it's kind of a backdoor play on retail inventory management.
Exactly.
All right, so two very interesting and thought-provoking trade ideas. As always, though, this is not financial advice.
Of course not.
Do your own research before making any investment decisions.
Always, always.
All right, so wrapping things up, some key takeaways from this deep dive are Zumiez improved profitability, their positive comparable sales growth, especially in North America, and their focus on newness and cost management.
Yep.
What are your final thoughts on this one? What really jumped out at you?
I think the big thing for me is that they're managing to grow sales even while closing stores.
Yeah, that's impressive.
And they seem to be doing a good job of controlling costs and improving their margins.
Yeah, they're definitely executing well in a tough environment.
Yeah, I agree.
All right, well, that's all the time we have for today. Thanks for joining us on the deep dive. We'll be back next time with another earnings call teardown.
Looking forward to it.
See you then.